Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like our 21 SPY and ES mean reversion systems, and of course our very advanced KISS trend following systems, which if you go to the systems section, go to KISS STS tables, you can view these. And again, highly suggest you getting a subscription because with a subscription, you can set favorites here, have them automatically email you whenever a trade is occurring. For example, AVGO went last week. Tesla is still long from August 21st. It's currently up 8.5% on that. Most of these on this list here are flat at the moment with the market. But anyway, I digress. Let's get back to this video. This is going to be a very comprehensive weekend newsletter, technical analysis of the market for October 8th, 2023. It's Sunday afternoon. And again, I appreciate everyone's support here on YouTube, etc. If you can, leave a like, comment. That really helps the channel grow. We're a small channel, and I'd really like to have this grow over time. And anyway, this is our backend recorder for our website, where we do our standard recording for our web page newsletter. And let me go ahead and get that started. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone has had a nice weekend so far. It's Sunday afternoon. It's October 8th, and this is the very comprehensive weekend newsletter from Breakpoint Trades. If you happen to be new here, these weekend newsletters especially are very comprehensive. I think I have almost 100 slides here tonight, usually taking about 50 minutes or so. So quite the discussion. These aren't made to be a quick YouTube video that, that's addressed to people with low, short attention spans. This is made to show things in depth, and if you're serious about trading, learning about technical analysis, you should have no problem watching the entire video. Anyway, you can see the weekend newsletter is divided into 7 major sections. By the way, I didn't add any new trade ideas. I need to edit this. I'm simply going over some recent ones. I did make a bunch of trade ideas on the weekend. I didn't put them on this newsletter because there's already a lot of charts. I'll probably post them on our trading community. But we are looking at a potential gap down on futures, which I'll discuss in a minute. All right, so just quickly going over my comments here again. On the web page, I suggest you read these. You can also pause the video and read it as well. But as you know, our market call has been pretty good. Back in late 2021, we were very concerned about the market. We were calling for a bear market in 2022, which we got. We identified the energy sector way back in late January 2021, early 2022, and that ended up having a great 2022, as you know. Bonds also got absolutely annihilated. And anyway, this year, market has rallied a lot, especially from that October low and, of course, the January low. But after the spring rally, both Steve and I thought that the market would hold up throughout the summer into late July, then experience a good correction in August, September, even into the early part of October. And that's exactly what has unfolded here. We've had a strong correction in the S&P and the market since the August, late July highs. So far, we have a 3-wave pattern here. Again, the bullish view would be some sort of ABC. Again, there's 2 cases that can be made, guys. The bulls say that the bear market ended in late 2022 and we're in a bull market. The bears saying that this rally has lasted longer than they expected and went up higher than they expected, but ultimately it's still a bear market rally and we're going to form a lower high. Either case is valid. Fundamentally, especially, I'm really on board with the bears. Again, we'll just have to see what happens here, guys. But otherwise on the market, we did put in a decent trade low last week. We were extremely oversold. I can also count 5 waves to the downside in the S&P. Anytime you can count 5 waves up or down, you usually look for some sort of inflection point. So it's possible we put in some sort of trade low last week and we could have some sort of end of year rally here. I will say that the S&P got pretty close to that 200-day moving average. We didn't tag it. Is that close enough for government work, or do we need to test it? That's a concern. The really for the bulls, we need to get over 43.33. That's the previous lower high. That would be a break in structure. We really need to see that. So again, I could make a case, guys, that a low is in. I could also make a case, and I'll show you below, that this is a fourth wave bounce, and we're going to go down again. All right. Now, again, let me go back. Let me back up a bit. Geopolitical risk. If you got up on Saturday morning, you know the horrible situation over in Israel. Just unbelievable, serious, unfortunately. Just I think 350 Israelis are killed, bunch of innocent people kidnapped, and I just can't imagine the trauma they're going through. Like, especially if you're a woman. So anyway, horrible situation there. As you know, there's been conflicts every couple of years between Israel, Palestine, and there's some rockets fired, things get settled, and usually there's some sort of temporary resolution. Palestine, Hamas will never accept Israel. But anyway, this seems like it's way over the top, the seriousness of it, the scale of it. This time it dwarfs all those minor events. Could this be a 9/11 event for Israel, forcing them to go all out, destroy Gaza completely, go after Iran? Who knows? It's a wild card, and the market doesn't like it, and that's why we're seeing early futures down. So right now I'm looking at about a 0.5% potential gap down on the futures, and that would be, that would put. So we'll see where that ends up being, but again, very fluid situation, guys. We'll see how that develops. Unfortunately, that's how the market is here, and I'll show you a couple examples in the S&P 30 and 60 minutes. And one thing I'll point out: earnings season starts in about a week. That'll take center stage as well. Typically, the markets do hold up into earnings season because, let's face it, the game they play, companies reduce their expectation, or they lower their guidance, and then of course, lo and behold, they end up beating by the time earnings go up, show up, and then the stock gets rewarded because they beat their lowered bar. All right. So we'll see. Generally, the market holds them to earnings season, but again, we could also get weakness here and then bottom into earnings. Big cap tech stocks, they're obviously what you got to watch. They've held up the best. If you remember, the big cap tech stocks skew the indexes because of their huge weightings from Apple and Amazon and Meta. And underneath the surface, the average stock is far weaker than indexes show. Bonds and rates, they just continued rallying very strongly last week. They did pull back off Friday's highs, the 10-year. We got to keep an eye on that, right? Market, to have some decent low, we need to see that. Now, I'll say TLT, 20-year bonds, is tagging a long-term support that I've had in place, so we'll see if that offers support. Long-term, again, Steve and I, what we worry about is the sheer amount of debt in the U.S. and the rest of the world. There's too much debt. It can never be repaid. How's that going to unfold? I'd say if the U.S. was in a vacuum and it was just us, we would be in real trouble. We'd be looking at like a, Venezuela, I don't know, Zimbabwe, whatever, But everyone's in that thing. I'm kind of wondering if eventually in the future we're going to have like a Bretton Woods 3, all the world governments get together and cancel debt, start some sort of other world currency. Who the hell knows? But something's coming eventually down the road. Mean reversion systems, as you know, they were been scaling into this pullback in the market, taking a little heat, making some of you nervous. Finally, on Friday's rally, we have several of these systems exit. So the position sizes are reduced on those. We still have open positions, which I'll go over. And of course, key events for this week, like I said, geopolitical, number one. Bond markets close on Monday. That may help a few things, perhaps, because we're not going to see a move in interest rates and bonds. FOMC minutes on Wednesday, PPI, core PPI, CPI on Wednesday and Thursday. Those are the big ones, guys. And let's go and get started here. Enough ranting there. So, okay, sorry about that. I had a slide that got out of order. So, First off, let me show you what I'm looking at first off in the market. All this will be covered below, but so you don't have to wait 20 minutes to get there. Let's talk about this first. So here's a 60-minute chart of the S&P. Again, you can see some wave counts on here. Again, the bulls can make a case that you can count 5 clear waves to the downside here. You see that? 3, 4, 5. That wave 4 stalled at the supply zone, pulled back, made a new low with a double MACD divergence. What I mean by double MACD divergence, you had a positive divergence here. The MACD was very far below zero. I discussed that. Those typically are not the bottoms. Your better bottoms are when you have a MACD divergence that's closer to zero like this one. So the case could be made that we put in a trade low. We rallied up into this supply zone. So again, it's still not confirmed for the bulls. We really need to take out this last lower high, 43.33, as I stated in the comments. And with the gap down, we're looking at a potential gap down tomorrow, especially with the geopolitical. Here added some fibs. If this is going to form a higher low, I was looking for a pullback anyway. I'd wanted to find support here. Definitely would not want to see it go below this 42.59, 61.8 fib. That's too deep. Then I think we go to another low again. Next. Image number 3, here's a 30-minute chart of the S&P. Again, shows you the wave counts here. So this one shows you various examples. So number 1, you have a little fifth wave here. The bullish case in green could have this start into 1, 2, 3. You get a pullback, a 4, and a 5. That could be wave 1. The bearish view is this 5 waves down completed wave 1. And we're working on a wave 2, which went over. It's going to go down in a devastating wave 3. Again, which one do I lean? I lean more toward that we put in some sort of trade low at the moment. But again, with the geopolitical stuff, you don't know. So anyone's valid. I do lean to the other one. I am looking for a higher low, maybe around one of these fib areas, maybe around this area. Right now, if futures are down about 0.5%, we're looking at a move down to maybe right around in here. So we'll see where it opens. Next, let's talk about the mean reversion system trades. Okay, as you know, let me move this over. We have these 21 mean reversion systems. They look for periods in the market where it's stretched, like a moving average getting too wide, price being too long below a moving average or Bollinger Band, stuff like that. It looks for moves that are too stretched, and it looks for a mean reversion, kind of like you stretch a rubber band and then it snaps back, right? So we've had a bunch of these individual systems. They're all their own systems with their own stats, okay? So I do that because of all the systems have good stats on their own, and they kind of play off of each other. Some of the systems sometimes enter too early, some of them, and some of them will enter later. An offset, maybe a bad trade on another one. So they all kind of help average each other out. If you only did one subsystem, you won't get that averaging effect, or you may get not many trades. So that's why you do it that way. I run the 21 systems on the SPY ETF and ES futures. So on SPY last week, we had the CCI system close out. It did make money here, even though the first entry was a slight loser, very slight. Remember, we double up on the second entry with a leveraged ETF, so that did make money. The RSI oversold system and closed out, I guess, early in the week, and then it went long again. That's a rare system, only 14 trades in something like 20 or 35 years. The QEBTS system did not exit. Okay, it's a second entry. And then on ES, like I said, we had the bull exhaustion exited, really nice trade there. These other systems are still open, okay? And let's move on. All right, so here's the live SPY trades that have been emailed out this year. Again, a lot less trades than last year. Last year we had almost 100 trades because of the volatility. Mean reversion trade systems do better in volatility, guys, because you have a lot of extreme movement. Anyway, so here's the trades of this year, 32 so far. Again, there's been some losers, more winners than losers, but there's been a few losers, not perfect. Here's what closed out last week with some nice gains, the CCI divergence and bull exhaustion, RSI oversold. Okay, what we have open is an RSI oversold first entry and first and second entry on QE BTS. Okay, so the risk has been reduced and profits locked in. If the market does go down again, there's less positions open now. And here's the total right now for the year. Next, image number 6. Here's the mean reversion systems run on the ES, MES futures. Now this closed out some last week. RSI oversold closed out nicely. Look at that second entry, made $1,600. First entry was early, only made $80, essentially flat. You can see the second entry really knocked it out of the park. Same for the bull exhaustion, same thing, nice gain there. And anyway, what's still open is the CCI divergence, QE BTS, and the trend pullback. Okay. All right, guys, that does it for there. Let's go ahead and move back to the general market analysis. So, item number 7 shows the index sector table, what transpired last week. So, again, nice day on Friday, as you know. Market had a heck of a rally. S&P was up 50 points or so. Big day. For the week, bifurcation, the Russell continues to be extremely weak, down over 2% for the week. Just unbelievable. And, well, what that also shows you, the weak Russell, because remember, that doesn't contain the big cap tech stocks that weight everything. So that really shows you more what the individual stock is doing under the surface. But you can see Dow and that were down, while the S&P and NASDAQ tech area were up. For, last week, obviously, last Friday, the sectors, pretty broad-based rally. Only one sector was down, consumer staples. Everything else up. For the week, mostly down. As you can see here, just a handful of sectors out of the 21 sectors we follow were up. Big losses in energy, down over 5.75%. Metals and mining. Again, weak strength in technology continues, and biotech actually bounced back. That's been very oversold. US dollar last week actually didn't gain for once. It was basically flat essentially. Remember, the dollar's been on a tear. It was off its highs on Friday. Cryptocurrencies were up on Friday. Kind of a mixed bag for the week. Bitcoin itself is flat. Commodities for the week, mostly to the downside here, except natural gas up 14%. Huge move. Remember, I had the UNG ETF as a play and a coil. That had a great move last week. Big loss in crude oil, down 8.8%. A positive is maybe that'll help some of the Fed's case, but here's the thing. The Mideast situation, is that going to do something with crude oil? Well, maybe. General index was down 4.2%. That's a big move down. Some strength in the ag area, as you can see here, corn, wheat. Precious metals, of course, were down. GDX slightly down, gold down 1%, silver down 3%. On Friday, they were up. And as far as bonds, again, big moves out for the week with the 10-year and, of course, the TLT 20-year bonds. Item number 8 shows the economic news calendar, which I already discussed. Again, geopolitical stuff, which is not on here. That's the big item. PPI, FOMC minutes, CPI. Those are the big items next week. Earnings season starts in about a week or so. That'll be important. Okay, let's jump to the index charts. First chart below, item number 9, is a yearly chart. So each candlestick is 1 year of the 5 key major indexes. I just want to show you where things are as of right now, as of the close of October 6th. The Dow is up 0.8% for the year. The Dow led last year, was down the least. It's up the least this year. Actually, I guess the Russell's up the least. S&P's up 12% essentially. NASDAQ or triple Q still up 37.5%. Crazy. IWM up 0.3%. DBC, that's commodities, up 3%. Remember, they had a big year last year. And actually, they're down 3%. This should be red. And then TLT, I mean, what a hell of a bear market in bonds. Down 12.7% this year. That they were down like 30% last year, and they were down the year before. So I hope you guys, since you're in Breakpoint trades, you're sophisticated and you don't have your money with someone like A.G. Edwards or Edward D. Jones, where they just hold these bonds as part of their 60-40 portfolio. They just write them down, just unbelievable. Generally, in past years, bonds were up when the market was down. That's not been the case here. You've been taking really, your portfolio's been getting nailed if you've been just sitting in bonds with your broker. Next, chart 11, here's the monthly view of the indexes. Again, as you know, we've had those nice corrections in August and September like we thought, and part of October. We're slightly up on a couple of these indexes for October at the moment. You can see on the Dow, long-term uptrend line, S&P, long-term uptrend line, still intact for now. But again, you know, is this a new bull market, or could the bears be right and this still forms a lower high? Kind of like like could this be a wave B? Then you go down again and see. That would not surprise me, guys, just given the economic backdrop and everything else. Again, I do think we're going to have some sort of end of year rally type thing, but maybe we don't go back to the highs. It's kind of what we're thinking, or we get a choppy move up. Next, chart 11, here's a weekly view of the indexes. Again, you can see the Dow slice through that trend line several weeks back, tagged its lower Bollinger Band, bounced off of it, doji candlestick. On the S&P, it bounced off its lower trend line here from the October lows. For now, we have 3 waves down. That's the hope for the bulls, is the 3 wave instead of this being a wave 3. Similar for the NASDAQ as well, tagging those trend lines. The Russell at the bottom has just been unbelievably weak. Finally, chart 12, here's the weekly view. By the way, this is the weekly KISS systems. A couple of you asked about it. So the S&P did tag its 4250 STS, smart trailing stop, last week. Again, you have to decide, do you adhere to that or do you adhere it on a closing basis? It tagged it and then it went right back above it. So, that's one option, is you could stop out and then go back long if the candle closes. You just have to decide, but it did tag it intra-week, as you can see. You do have the moving average pension on the weekly. The Qs did not hit its weekly STS stop at 345.10. IWM has not been long here. You can see it's got up to mark 9, so maybe short-term oversold. And the Dow at the bottom has not hit its smart trailing stop either. Next, chart 13, here's a daily view of the 5 key major indexes. Again, you can see on the S&P here approximately nice rally on Friday, but this is a big line in the sand here, right around this 43, 33, 35 area. That's the big area we need to get over. Okay. Next, let's look at the indexes individually. So here's the here's the Dow. Don't show the Dow often; it's only 30 stocks. So the Dow bounced initially off this uptrend line in August, stopped at the 61.8 fib exactly, little ABC, broke its trend line. Lost its 200-day moving average. It's been below here for a little bit. Again, got a little oversold. Moving average ribbon wide. Little bounce on Friday, but closed right below the 9 EMA. Again, it's got to clear the 9 EMA. It's got to clear the 200-day moving average. Let's move into the S&P 500. That's our proxy. So here's the weekly view of the S&P. Again, technical analysis played out perfectly. We were expecting the market to hold up into late July, which it did. It also technically tagged the upper channel line and this resistance area. You had an RSI divergence, everything lined up there. I went short on late July, but I should have went tenfold short. Everything was lined up there. Sometimes trading and technical analysis are different things because of emotions and discipline. So, and also, conviction. Part of my problem with trading is sometimes just not doing large enough trading sizes. So my technical analysis is definitely far superior to my individual trading. Wish it was the opposite way, but hey, you guys pay me to teach you, so maybe it's not that bad. But anyway, down here at this lower channel, which was our target, so far we're trying to bounce off of it again. Like I said, we either get a move up now, like we see here, or we bust this down, and this is a wave 3. So it's we've either completed a wave C, we go up, or we're in a bearish wave 3. You can see the RSI trend line, lost its trend line. Next, chart 16, another weekly view. You can see the same thing. We've stalled at the top of the channel, got to the bottom of the channel, and this support zone. You got a rudimentary cycle indicator down here, which is hinting at a possible low. We'll see. Next, chart 17, daily S&P. Again, we broke down from that stalled at the top of that channel. It's the same channel I showed you on the weekly. Formed a coil, busted down from that several weeks ago. Got near the little below the trend line here, reversed. So we'll see. Now we got pretty close to the 200-day moving average. I really wish we had tagged it, quite honestly. Is it close enough for government work, or is this conflict in the Middle East going to cause it to go down again and hit that? We'll see. If you go too far below the 200-day moving average, though, that really starts supporting the bear case. Chart number 18, zoomed in daily view. Again, we got down to this support zone, demand zone. There's a breakaway gap here, which we essentially filled. Remember, these gaps on the cash like to fill. So we filled that. Nice bounce on Friday. We regained the 9 EMA. But again, really need to regain this 43.33 area. And the onus is on the bulls. If we pull back early this week, you don't want it to be too deep. Next. Chart number 19, here's the KISS trend system. Again, it's first off, it caught a nice trade back in March into early August. It then had a whipsaw, and it looks like on Friday it went back long with a stop right at the low. Next. Chart number 20, here's the 4 time frames we like to follow. Again, we were getting pretty stretched. I talked about these wide moving average ribbons. Again, think about that like a mean reversion. We did bounce on Friday. We're below the ATR in these time frames. This is resistance. You can see we tagged that 130-minute ATR. On the 78-minute, we had the end of bear cycle, which we talked about last week. That ended up cradling price when we rallied off of it. Next, chart number 21. Here's 2-hour view. Again, shows this potential 5 waves that we may have put in. By the way, about 95 points off the lows. So if you take it with respect to this high at 45.41, that was the largest rally from the highs here. Not from the highs here, obviously. This whole thing was much bigger than 95 points. But this last wave 2 was 81.5. So this is higher. It does technically suggest a higher low. But again, I wouldn't really want it to not get too deep on here. 50% retracement, something like that. Next. Chart number 22. Here's another 2-hour chart. Just shows you that clean coil. We've rallied up. This is your big resistance supply zone here we need to clear. The positive for the bulls are hanging their head on a little bit. You did have a very nice MACD divergence at the lows here. And if you don't have MACD divergence, then typically it's only like just a bounce. But the MACD divergence does give some hope that we do have a decent low. Chart number 23, here's the 60-minute chart showing that wave count that I discussed early on. Again, the bullish case that we put in a wave 5 here. We've rallied up to this supply zone. We really need to take out this 43.33 high. And a pullback here added fibs. Really, I'd want to see it hold around in here, 50% fib, this area, 42.68. Not get below this 61.8 fib. Then we're going to go to another low. But let's see if we can form a higher low here or not. Chart number 23 or 24, here's that 30-minute view where this shows, both counts, either a wave 4 bounce or wave 2 bounce in a bearish view, or we're in a new uptrend like a wave 1. We'll see which manifests. Chart number 25, another clean 60-minute view. Again, we really need to get over this area. Nice rally on Friday, but we did not clear this zone. That's your previous lower high. Chart number 26, another 60-minute chart, clean channel. We did break the channel. Whenever you break a downtrend channel, one thing you want to watch for is on a pullback, you want to watch price to hold that channel line. That's, one possibility. We get, that pullback and then we bounce off of it. So that's one thing to watch potentially for early this week. And finally, chart number 27, here's a 15-minute view. Again, we didn't quite take out that 43.33 high last Friday. We got pretty close. Here I added fibs and a demand zone down in here. We'll see if price can form a higher low in here or not. And so there you go on the S&P 500 and what our thoughts are. Let's move on. Chart number 28, here's the NASDAQ. This is the weekly chart, up 1.8%. The bullish view is this is simply an ABC pullback, wave 4, and we're going to go up in another. I mean, this would be your super bullish count. 1, 2, 1, 2, 3, 4. Up here would be a wave 5 of 3. That's your super bullish view. Chart 29, here's the daily view. Still overall in this channel. We've rallied up a little bit. Monitor this next broken trend line here. Could be a little resistance area. Notice you got your moving averages there as well. Chart 30, here's another view showing an ABC. If we get another sell-off, this would be a target. Again, the Qs have held up the most because it contains those 7 stocks, 10 stocks, which have carried the whole market indexes. If they start to go down, though, then the market's in trouble. Chart 31, here's the Triple Q's KISS system. Again, it caught 2 great trades from January to February, then one from March into early August. And then the next one was a whipsaw, which is typical on these KISS systems. Remember, these KISS systems maybe have 60 to 70% winning trades. So you have, losing trades in there, typical. Now we'll see the next trade maybe has a higher luck of being a winner. Chart 32, here's the 4 time frames. Again, the Qs have held up the best. You can see he had it to Mark 9 over a week ago, which so far has produced a bounce. Again, we need to regain the ATR resistance here. We did regain it on the 130 minute, held as a support. And on the 78 minute, we had to end a bear cycle and we bounced from there. Chart 33, here's a half day chart, 195 minutes showing the channel. And this, by the way, would allow for a wave 4 bounce. This could be just in a wave 4 bounce here, and we get another move down on a wave 5. Chart 34, another 2-hour view just showing these clean trend lines. We bounced off that trend line over a week ago. We're basically in the middle of the pattern. Chart 35, another 60-minute view. We broke this coil. We got just slightly over this symmetry zigzag target. Okay, there was an open gap back here, which was a magnet, and that was filled. Next, taking a look at some of these individual big cap stocks. Here's Apple, Crapple, I like to call it. You had a bearish break in symmetry there in early August. So after that initial sell-off, I was looking for a lower high, wave B, which we got near the 200-day moving average, trying to bounce. Again, where Apple goes, the market usually will go. Chart 37, Meta had a nice breakout on Friday. We'll see if this can follow through or not. Man, not very far from the highs, is it? Not at all. Chart 38, here's the NAHL. This is the NASDAQ new highs minus new lows. So guys, this shows you, to me, it shows you the best visual of how you have, basically 10 large cap stocks leading the market with all the smaller stocks lagging behind. I mean, look at this. Usually this will go with price. We started seeing a divergence in late 2021, all right? Obviously, this was down strongly in 2022. But look, the market bottomed in October, and then again in early January, rallied up, had another bottom in March, rallied all the way to July. But look, since the rally in July, from March to July, this thing went down, and it continues to go down. To me, this is concerning longer term. You can't have a healthy market with, 7 to 10 stocks leading the indexes. Next, let's follow up with the Russell. Here's the Russell 2000. Stalled at the top of that pattern that we talking about back in July. You had an RSI trend line break there. Head and shoulder pattern, which I talked about, played out. We broke the lower trend line. We did rally on Friday, but again, we still closed below this trend line resistance. Chart 40, here's a 2-hour view. I'm just simply monitoring this clean channel. No real, maybe a slight divergence there, but again, bounce on Friday, but it's still within the channel. This is your supply zone. It needs to get out of this channel to have hope for a bounce. And there you go on the indexes, guys. Now, let's go and move on, look at some indicators. Chart 41, here's the VIX. So the VIX went on a VIX Bollinger Band buy signal last Wednesday when it closed back inside the Bollinger Bands. And that so far worked out for a nice trade. Again, the VIX has had time to build up a nice base here from June into September. So, if this wanted to reverse and go back up much higher, it could. But so far, short term, that buy signal worked out. Chart 42, here's the put call ratio. Also, early last week, I think Wednesday, this had spiked up to 1.59. Again, it didn't get as high as December 2022, but this was way outside its upper Bollinger Bands. That's a pretty high fear spike. And, that's one for the bulls that maybe we had some capitulation there. Chart 43, here's the percentage of stocks in the S&P 500. They're above their 20-day EMA. Again, this also got in oversold territory right around 5%, similar to what it was in March, right? And we had some MACD divergence. Chart 44, here's the NYSI buy and sell system with the 9 EMA. This gave an excellent sell signal back there in early August. It's not close to giving a buy signal here. This needs to curl up and get over this 20 MA. That's why I don't think we just go straight up here, guys. This is going to take some time. But for now, price is trying to bounce a little bit off this support trend line. Chart 45, here's my other system, the NYSI weekly with a trigger off the candlestick. And now with last week's down candle, the trigger shifts to the high of this candle. So this needs to move up that takes out the high of this for a buy signal. Pretty good signals in the past, as you can see. Chart 46, here's the NIMO. So both the NIMO and NAMO, we have some positive divergence between with a higher low on the NIMO, higher low on the S&P. So those are some positive things for the bears, guys. Here's the SPX versus the BPSPX. Remember, I talked about this several weeks ago, back in early September. You had a divergence here, higher high in the S&P, lower high in this. Well, that ended up pulling down the market. Right now, there's no divergence here. This is still quite weak. Here's a positive. Here's the S&P XLP ratio. Usually this ratio moves with the market. It's highly correlated with the market, not always, but this did make a new high on Friday. We have a lower high in the S&P, so maybe this can pull the S&P up. Next, moving to bonds. Here's chart 49, high yield corporate. As you know, it lost its 200-day moving average last week after breaking that trend line a couple weeks ago. Broke that trend line, back tested it. Bounce on Friday, but again, still finding resistance at the 200-day moving average. Where this goes, the market tends to follow. So you always got to follow high yield corporate. Here's the weekly view of high yield corporate versus the S&P. Again, look, the two move with each other. Okay, they both broke their patterns here. Keep an eye on high yield corporate. It's still quite weak. Okay, weaker than the S&P. Chart 51, here's the 10-year Treasury yield. Again, up 4.6% last week. Just heck of a move the last few weeks after breaking out of this resistance. And, of course, breaking this flag. Hell of a run from the 2020 lows. Chart 52, here's the daily. On Friday, this had a spike up to 4.9%, closed off the highs. There is some RSI divergence here. The moving average ribbon is very wide here. But again, given the political risk, geopolitical crap on the weekend, who knows, maybe this wants to spike. But for the market to have a good rally, we need to see a pullback here. Chart 53, there's the bigger picture view. Again, long term, remember, interest rates were in a 40-year secular bear market. It started from early 1980s and broke out of this 35-year channel in 2022. That ended the secular bear market in interest rates. That means interest rates are in a new secular bull market. Secular markets, guys, tend to last 10, 20, 30 years. So don't expect rates to come back to these super low 0.25% levels, maybe for decades. Consider that. Rates aren't going to go straight up, okay? Rates aren't going to do this, right? Unless there's a disaster. But, more than likely, they're going to do stuff like this. They'll work higher over time, but, the new normal is up for the long term. Next. Chart 4054, here's TLT 20-year bonds. Again, a hell of a sell-off after losing that channel support back in August on Friday. Was bounced a little bit off the lows, but still closed fairly weak. There is a little divergence here in the RSI. Chart 55, here's a 2-hour view. Clean channel, going to monitor this. You did have a little MACD divergence down here, but I need to see a clean break out of this channel that holds for me to think there's some sort of bottom here. Chart 56, here's TLT weekly. Again, down 4% for the week. Hell of a sell-off since breaking that support. And finally, chart 57, here's the monthly chart. I've had this in place for months, this fifth wave pattern, this demand zone. And finally, we're into the top of this demand zone. We do have a MACD divergence down here. A potential fifth wave. Fifth waves can extend, okay? This could get deeper and deeper. But if it does find support in here and starts to bounce, right? I think that would give evidence, or that would give support for the market to have some sort of end-of-year rally. But ultimately, it should just be an ABC bounce, lower high, not start a new uptrend. It's not ever going back up here. Not for many, many, many years. Chart 58, here's the monthly view. Another one, this shows you that same wave count. So here's my postulation. If it finds support in here, eventually you get a decent ABC rally up like this, forms a lower high, and then dump again. You can see the 5 waves in the moving average ribbon. You could also see a little trend line on the RSI. So to me, if we can get this reversal off here, again, it'll still be a bear market rally in bonds, but that would give support for the market to bounce. Chart 59, haven't shown this. Here's the yield curve. Yield curve obviously still inverted, but it's come up quite a bit. Watch this, guys. If this comes back over the 1 area, that's usually when you get your recession hitting. Okay. Next. Let's move on to some of these sectors. Chart 61, here's XLE Energy. Again, we warned about these being very overbought back here in September. You had a little double top, sell-off. Didn't quite tag the 200-day moving average yet, but nice pullback. Chart 61, there's the oil services. To me, this had a much clearer 5-wave uptrend, MACD divergence. So it was really set up for a pullback. For now, we do have potential ABC pullback. Chart 62, the evidence that why we were bearish back in September was the bullish percent energy index is up here at 96%, sky high territory. You know, where you want to be buying energy stocks for swings is when it's down in this range, like it was back in June when it crossed the moving average here for a buy signal. This has worked down. It's nice to see that. Looking at some of the other sectors, here's XLK technology. Again, mirrors the cues, basically. Technology is still the strongest area. Chart 64, semiconductors. Again, that's another strong area. This is a big support down here. We didn't quite tag it up on Friday. Chart 65, here's the transports. Hell of a sell-off from the highs there in late July all the way to this lower trend line. There is a little RSI divergence and a little bit of MACD divergence as well at support. Chart 66, biotech. Again, it's been absolutely creamed. Now, I don't have it labeled here, but from this high, you can count. Let me just draw that in for you. 1, 2, 3, 4, 5. So you do have potential 5 waves down here. RSI divergence. And clear those out. So far, a mean reversion bounce off those lows. The trade idea I gave last week to our subscribers, LABU, that's the triple ETF, had a nice wedge on a 2-hour time frame, nice MACD divergence, and it's been a nice percentage gain from there. Chart 68, airlines. This area's been absolutely pummeled from early July. Look at that. Boom. This is why MACD divergence is not a buy signal on its own. That divergence started back here in August. 54 consecutive closes below the 9 EMA. That is getting quite stretched. One way to play a bounce in airlines is an ETF, JETS. Here it's in this clean channel. Here's another Charber 70, a 2-hour review of Jets, same channel. It did breach one trend line in the channel, but it needs to hold that, and I really need to see it break this upper trend line. Charber 71, utilities, they've been pummeled. Remember, with interest rates high, this reduces demand for these utilities. So far, you have a little double bottom bounce here. Notice how wide your moving average ribbon was. Some RSI divergence. So again, think of that as reversion to mean. Those ribbons can only get too stretched before they have to mean revert, right? That's why these moving average ribbons are a very good visual guide. Charber 72, here's real estate. Also bouncing off those lows, tagging the 9 EMA. Charber 73, XLP. Look at this candle on Friday. Big long-legged doji, some RSI divergence. So market tends to follow this, and this has been correcting since August. If this bounces, that maybe will be a positive for the market. Charber 74, here's industrials. Nice bounce on Friday, but still below the 200-day moving average, still below its major trend lines. All right, moving on to commodities. Charber 75, DBC, the index. Hell of a sell-off last couple weeks. Now it's back around there, the 200-day moving average, which was last support. Charber 76, crude oil, weekly view, down 8.8%. We had a doji candlestick last week, which was an indecision, a little warning, and then we've got a big sell-off. Now, you got a bunch of moving averages here. We'll see if we hold those or not. Charber 77, here's the daily. Again, heck of a sell-off. We had the wide moving average ribbon. We had the RSI divergence, MACD divergence. Again, it was stretched here. Big sell-off below the 50-day moving average. Charber 78, natural gas, up 14% for the week. Finally breaking out of this pattern. Natural gas tends to do better this time of year. Nice break. Now for natural gas, on the website, we had UNG. That's the ETF. We had this coil, and this busted out very nicely. Good percentage gainer. Hope you caught it. Charber 80, here's copper. Was below this trend line last week, kind of recovered a little bit, but overall the pattern still looks weak to me. Charber 81, there's the daily view. Charber 82, DBA, little bounce on last week. Overall, still holding this long-term uptrend line. Charber 83, there's another daily view. Now on this one, it broke this trend line. We're nearing a back test. Charber 84, DBA. Now 60-minute chart, we did have a little bullish symmetry break here. We didn't have a break in structure, but a break in symmetry. So this was the largest bounce from the downtrend here, the September highs. So maybe we get a higher low in the next pullback. Charber 85, uranium. Heck of a move. We had this long idea back here in August. Heck of a move. It got overbought. We had RSI divergence. It's had a nice sell-off. Now, I like this longer term, as you know. Some of you bought this dip, and I think it's okay. But this, to me, I only see one wave down here. So this could be simply a wave A. We're working on a wave B bounce, and then come down again in a C. And if it does that, to me, that's your better bottom to really get aggressive. Charber 86, there's the monthly view. Again, you can see why I like it longer term. We busted out of this big coil. It's in a bull market. But, just got overbought in the short term. Charber 87, Bitcoin broke out of the coil last week, but so far it's just been chopping around. Hasn't been a strong move out of there. Charber 88, here's Mara, one of the Bitcoin type stocks. Nice bounce on Friday overall. Had a hell of a haircut since the July highs. Charber 89, US dollar, not finally pulling back the last couple days. RSI divergence kicking in. If that dollar pulls back more, that could help things. The dollar could strengthen on that Israeli conflict, perhaps. Charber 90, there's the weekly view. Again, you have a spinning top doji candlestick, so possible we do have a top in there for now. But overall, because we had a bullish break in symmetry on the weekly, we took out those last highs, lower highs. I think a pullback from here will form a higher low and then go up again. Next, moving on to gold. Here's the weekly view of gold, down 1.1% for the week. Again, seasonality played out. Gold usually tops out in late April, early May, and that's what it did up at this resistance. So far, we got three-wave pullback. I do think it's getting lower risk again down in here. It's had a nice correction. Trevor 92, there's the daily. Again, we had this coil that we busted down from. Got between the 50 to 61.8% area. Nice bounce on Friday. Keep an eye on the ratio here. It's curled up a little bit. Obviously, not close to breaking a trend line yet. The stocks lead, so you want to follow the ratio. Trevor 93, there's the monthly chart of gold Steve showed a couple weeks ago. Potential cycle where gold projects to a low maybe early 2024. We'll see if that pans out or not. Trevor 94, silver, weekly view down 3.25%. Busted that trend line last couple weeks. Trevor 95, there's the daily. Nice bounce on Friday. Remember, this area is resistance now, that upper trend line. Trevor 96, there's the bigger picture view of silver. You know, if it can eventually break through this long downtrend line, that would be quite bullish. But again, that's going to take time. Trevor 97, GDX, so far nice bounce the last couple days. You know, again, is that a low or is this just a bounce in the downtrend? You don't really know yet. Trevor 98, there's another view of GDX, same channel. Here's the ratio. We haven't broken that trend line, but the ratio did curl up here. Trevor 99, here's the 2-hour view. The steep channel, we have bounced off the channel, but here's the thing, guys. MACD was very low below zero here, so not sure if that was the low. But we'll see. Gold may benefit on that geopolitical. Here's the 60-minute chart. You had clear 5 waves down, MACD divergence, and it did give you a nice pop out of there. Trevor 101, gold, GOLD. I had this as a setup late last week. It broke. The trigger was taking out this doji, which it did. Nice trade. Trevor 102, GDX on this, or GOLD on the 60. That was your evidence. You had your MACD divergence on that time frame. Trevor 103, BPGDM. Again, it got down to, it didn't budge with the bounce last week. It's still at 10.7%. So it is an oversold territory. Back at the April highs, it was up at 75% overbought. As far as trade ideas, guys, again, I made about a list of 10 trade ideas for this week. I don't have them in the newsletter here. I may add them on the trading community later, but here's some of the recent ideas. Here's VLO. This is was a short of ours over a week ago. Obviously played out beautifully from that trigger. Refiner, basically, Charbert 105, another refiner. Hell of a short that played out. Charbert 106, CNK, I've had it on the watch list for at least about 2 weeks. Finally breaking out nicely. Nice to see that. Hope you caught it. Some other shorts we had were some of these home builders like KB Homes here. Tagged as 200-day moving average, a good target there last week. Charbert 108, CAH was a long idea from last Monday, broke out. This would be the target area if it can get up to there. Charbert 109, here's AMD breaking out of this trend line. Again, guys, we'll see where futures open here in about 45 minutes. Again, I appreciate everyone's support here. And again, horrible situation over there in Israel, the Middle East, especially if you have some subscribers there. Really feel for you. And again, we'll see how that unfolds. Have a wonderful rest of your Sunday evening, guys. Thank you.